Hey guys, Jason Balin at Hard Money Bankers and Hard Money Business. You probably watched my Facebook Live yesterday that I did with a buddy of ours that we do a good amount of business with. His name was Ian Horowitz. If not, check out the Facebook page or the Facebook group, and you can watch that. And the important lessons on that was understanding the importance of having private capital and controlling the business, and the importance of it and the flexibility of it, especially since times are changing and you want as much control and you want to have the flexibility inside your business, and having that private capital to make the right decisions works so much better than having to either broker a deal to somebody or dealing with banks or institutions. Just having that capital and working with these private investors is just so much easier. I'm going to get back to that in a second. Ian is he's a good client for any hard money lender to have. So he's a full-time firefighter, but he also owns maybe like 70 or 80 properties locally in the Maryland area. And him, along with pretty much most of our other good borrowers that we have, they have a lot of options when it comes to capital. They don't necessarily always need to use hard money. So for instance, Ian has bank relationships, he has cash, he has HELOCs, he has other private capital investors that he uses directly, and he uses us as well for hard money. And there's a time and a place for every type of transaction. I got to tell you that there's a lot of big borrowers that we work with, and people are like, well, why would this guy use you and spend 13% in 3 points when they could just go to a bank or use their own money? And they'd use all kinds of different sources. But the last few deals, just to give you a quick reference, the last few deals we did for Ian were ones that he wasn't expecting to get. The auctions got ratified quickly and he needed to move quick. And so he couldn't go to his bank for that. And some of his private capital investors were tapped out. So he came and spent 13 and 3 with us. And that works. I'm not going to do all of his deals. But I am going to do a few a year, and I'm happy to do them. So let's get back to the importance and the flexibility of having your own capital, because it's just so important. Obviously, we've talked about the money that can be made on the front end of it is, hey, instead of brokering a loan to make a point or 2 points or whatever the case is, you can control all of it, and you can make the money on the front end, you make money as you service on the back end. So it ends up being typically 3 points on the front, another 2, 3, 4 on the back, as you're servicing it. So it works, but obviously the money side is the most important, but the flexibility is just as important. I mean, think about this. Let's say you go out and you raise $1 million and you have $1 million fund, or however you want to call it. It doesn't have to be a fund. You have $1 million. You pick what deals make sense. You cherry pick what deals work and what deals don't work, and you only pick your good deals, and you're along with it. You make the rules. The reason, and it wasn't, when I did this Facebook Live, it wasn't that I was bad mouthing lenders that have institutionally backed capital. It was more of, they lose a lot of flexibility. The borrowers lose flexibility on the front end, and you as an operator lose flexibility on the back end. And the reason the borrowers lose flexibility is they have to go and they have to show full financials. You have to stick to an exact metrics, let's call it, an exact metrics, and it either works or doesn't work. I mean, a lot of the good deals that we get are because I can move quick and we don't have to over document something on something that's just a home run anyways. I can't tell you how many deals come in every month where a borrower owns or a client owns an investment property they paid $200,000 for, and they own it in cash, and they need $40,000-$50,000 cash out. And maybe they don't have good credit. And they need cash out just to fix the thing up, because they want to throw it right back on the market. And they own it in a business entity. Because they have low credit, because they might not be able to show affordability on it, even though they're exit strategy selling, most of these institutionally backed lenders won't be able to do that. That's a home run. That's a deal that the borrower is not very price sensitive. They need to move quick, and they need this as a solution, so you can help them get through that. There's so many examples of that. Yes, if you do the institutionally backed capital, it's cheaper, but again, net, you can lend out at 8 and 2 and make smaller spreads, or you can lend out at 13 and 3 and make bigger spreads, and you don't have to do as much volume to make the same amount of money. There's just so much flexibility related to it. The other thing related to having kind of the bank side, well, two sides. Number one, the bank side is that money's gone. It's gone. If they pull the line, it's gone. Depending on how you have your institutionally backed lending setup is, if you have to personally guarantee it, or if they call the loans, if you don't have control over that, and let's say they call a loan with a borrower, that borrower's it's gonna piss that borrower off, and it's gonna be hard to get another deal from them. First off, and I'm really, really hoping if you're doing this, you don't have any PGs, personally guarantees with these banks, because that could really screw you up in the future. We've had deals that go sideways. Everyone has deals that go sideways. You know what happens when a deal starts going sideways? We get on the phone with our private capital investor who's involved in the transaction with us, and we say, listen, this is what's going on. What's the workout plan? Let's figure out the way that it works. And the workout plan may be like, you know what? This guy's, hasn't been making payments, but they've been doing the construction. Let's just roll the payments on the back end. That's an option. Or let's lower the payment amount. Or it's like, hey, let's go full throttle in foreclosure and take this property back. And when we take the property back, we'll renovate it ourselves, and then we'll resell it, or we'll turn it into a rental. So there's just so much more flexibility when you have that private capital. So I encourage you, if you're really, really serious about being a hard money lender and growing your hard money lending company, to control the capital. Don't just broker loans out. Don't just go to and get institutional backed money, because it's easy to get institutional capital, especially right now. It's not going to be like that forever. Very soon, I think a lot of that stuff's going to get cut. And institutions and funds have reached out to us forever since we've been in business to try to get us to utilize their money because it would be cheaper. But I don't want to deal with the red tape. I want to keep my life easy, and I want to do the good deals that we get, and that's it. Only the good deals that we get that aren't going to be a headache. I don't have to go through a lot of red tape. It's us with our private capital investors doing that deals, and of our own money doing the deals. That's the way I want to do it. And I encourage you, if you want to be a hard money lender, do the same. Don't worry about doing more deals. You don't need to do a lot of deals to make a lot of money in this business. You need to do a few profitable deals to the right people. And again, getting those deals obviously is a different conversation, because you need to have a huge marketing campaign, or not a huge, you have to have a marketing campaign in order to get those deals in. And I've talked about that, ways that we get all our deals in other videos. So hopefully this was helpful and you got something out of it. Any questions related to this, comment below this video. Comment. We're here inside YouTube. We're here inside this Facebook group and a lot of other places, communicating with everyone who wants to start or grow their own hard money lending company. And there's a lot of other lenders in here as well. This is what we do every day. So don't hesitate to reach out and ask any questions that you have. Okay. Jason with Hard Money Bankers and Hard Money Business.